Good morning, friends. I am Devarsh Vakil from HDFC Securities. Today, on 3rd of September, we are recording this video. This is one more video in our Fortnightly Market Outlook series. First, I will discuss about important international developments over the last fortnight. Then, we will have Nagraj tell us about how markets are poised technically. And after him, Subhash will share his views from derivatives data. And after serious discussion on markets, let's have some fun with a finance meme. So let's start with the first segment. Key developments over the last fortnight. The US Fed Chairman Jerome Powell in Jackson Hole Symposium between August 25th to 27th gave a very hawkish speech. He reiterated that Fed is committed to raising rates and fighting the inflation until it gets the job done of bringing the inflation lower. US Treasury yields have surged. In Europe, the inflation has hit the record high, unemployment is at the record low. There is an energy crisis brewing in the Europe, and in the currency market, the yen has now fallen to lowest level since 1998. So the US markets bottomed out in mid-June and it rallied. So in last couple of weeks, it has given up more than half of its recent gains. So if we look at the longer term chart, the hike in interest rates by December and the deterioration of the economic parameters threaten that the markets can come back to 3600 level, and if fundamentals do deteriorate further, it can even go back to 3400 to 3200 level. What will be the impact of lower US markets on global markets? That is the point we need to worry. Let's look at the markets movement over the last fortnight and last 1 month. So over the last 1 month, the American markets have corrected between 3 to 5%, but the correction has now started intensifying in the American markets. They are down between 7 to 8% in the last fortnight. So similarly, Indian markets are up about 1% over the last 1 month, but over the last fortnight, as you can see, they have given up most of the gains and now trading underwater. The important thing which we keep on highlighting that mid cap and small cap are actually outperforming. Mid cap is up 3.7% over the last 1 month and small cap index is up. So this comparison is easily visible in this chart where American markets after bottoming out in mid June has given up most of its gain while Indian markets are still trading near their highs. Not only against the American markets, but Indian markets are outperforming the emerging market. The emerging markets have not only given up most of its gain over the last 5 years, but now trading underwater, while Indian market in dollar terms are still up 35 to 40% over the last 5 years. So India is outperforming American market. India is outperforming the emerging markets. The reason why India is doing quite well is because the FPIs have now returned back to India. So as you can see from the screen, from October of 21 till June of 22, they were consistent sellers in the Indian market and they sold heavily. Now they have turned buyers. In July, they have bought about 5,000 crore. In August, they have bought about 50,000 crore worth of stocks. And that's why Indian markets have done relatively better. So this is the calendar of important events. ECB is going to announce its monetary policy on 8th of September. The Bank of England is going to announce its monetary policy on 15th of September. And importantly, the FOMC, America's monetary policy rate decision will come on 21st of September. China will take measures to boost up its economy again. On 20th of September, we expect some rate cuts here. India will have its own RBI Monetary Policy Committee meeting on 30th of September. There are also holidays. The US market is closed on Monday, 5th of September. The Japanese market is going to be closed on 19th and 23rd of September. The Chinese market is closed on the 12th of September. Now let's invite Nagraj to share his views from technical charts. Over to you, Nagraj.
Hi friends, this is Nagaraj. I welcome you to Fortnightly Market Outlook on technical aspects. The technical observation on the Nifty daily time frame, a range-bound movement was seen on the 30th after a sharp up move of 30th of August and the small negative candle of Friday, which indicates a range movement. The market is in a narrow range and initial support of 20-day EMA is offering in the last few sessions. On the weekly time frame, the long wick candle was formed with a long upper shadow. This indicates an emergence of selling pressure at the highs after a sharp buying. And in the monthly time frame is intact. Market is actually attempting a multi-month resistance around 17,800, 900 levels. That is a down trend line. And the initial support was seen around 10-month EMA, which is placed around 17,000 mark. Friends, mid cap and small cap indices outperforming have been, and the broad market indices, both the indices of mid and small caps, have seen upside breakouts of the immediate resistance of downsloping trend line and crucial resistances. And any small dips in those sectors is going to be a buy and dips opportunity. It is clearly seen that mid and small cap segments are outperforming. So, the friends, conclusion is the short-term trend of Nifty continues to be range-bound with high volatility. One may expect Nifty to move within a range of around 17,300 to 17,800 levels by next week. On the move below the lower range of 17,300 levels, the long trading positions or leverage positions needs to be cautious. One may place appropriate stop losses, and further supports are seen around 17,000 level. The renewed buying enthusiasm could only occur above the immediate resistance of 17,800 levels. The long-term uptrend remains intact, and any downward correction till 17,000 level could be a buy on dips opportunity. Friends, that's all from the technical aspects of this fortnightly market outlook.
Thanks, Nagaraj. Now let's invite Subhash. Over to you, Subhash.
Good morning, everyone. This is Subhash, Senior Derivative and Technical Analyst at HDFC Securities. So today we'll be talking about the derivative outlook on the markets for the coming weeks. Coming to the derivative data, we have seen a short build-up in the Nifty futures segment in the September series till now. Open interest has risen by 22%, while the Nifty has fallen by 0.11%. In the Bank Nifty futures, we have seen short covering, as open interest fell by 0.35%, while the Bank Nifty rose by 1.11%. Coming to the option data analysis, we are seeing put writing in the 17,300 to 17,000 strikes, while calls have been written at 17,800 to 18,000 strikes. This indicates that 17,300 to 17,000 levels are likely to act as an immediate strong support in the near term. Immediate resistance is now at 17,800, where we are seeing calls being written. Coming to the FI data analysis, we are seeing short build-up in the index futures segment. FI is net sold 5594 crores, with open interest going up by 44,187 contracts. FI's net long to short ratio in the index futures has fallen to 0.24 on Friday, as against 0.65 on last Friday. The declining ratio suggests that FIs are building shorts. As you can see in the graph here, the FI's long to short ratio has been consistently declining over the last few weeks. So our outlook for the Nifty is that we remain long-term bullish with a trailing stop loss of 17,000 levels. However, considering that there has been a short build-up in the Nifty futures and call writing is seen at 17,700 to 18,000 levels, and also short build-up by FIs in the index futures segment with the long to short ratio declining and below 1, we should remain cautious for the short term. Traders with leveraged positions in the F&O markets need to keep strict stop losses to control their risk. Coming to the Bank Nifty, we remain bullish and recommend a trailing stop loss of 39,000. Short covering has been seen in the Bank Nifty futures, and put writing at 39,000 to 38,500 strikes suggests that the downsides could be limited for the near term. Also, the Bank Nifty has been outperforming in the August series and could continue to outperform in the September series also. However, considering the sharp run-up, we remain open to the possibility of a running correction, and crucial supports to watch are at 39,000. On the higher side, 39,500 is acting as an immediate resistance where we have seen call writing. So any close above 39,500 could result into further short covering, which might push the Bank Nifty towards the 40,000 levels in the coming week. Thank you.
Okay, what is the way forward? So we are looking at an important fortnight ahead. First and foremost, we will watch out for American markets, whether the US market indices will break the recent lows and head much lower. India has been decoupling from the American markets. Can we sustain the recent strength in light of American weakness? Whether our mid cap and small cap will continue to outperform the Indian indices? All these questions will be answered over the next fortnight. So how do you position yourself? So the advice is to remain stock specific. If you have been following us, you know that over the last 1 month, a lot of money has been made. Rich pickings are there to be taken for the individual stock pickers. Over the last couple of months, many of our fundamental picks have given anything between 50 to 15% of returns. These are the some of the names which are there on your screen. So we would advise you to continue to follow us and help you and your patrons earn money from our recommendations. That's all for this video. Thank you friends for watching this video. I hope you find this video series useful. If you have any feedback or suggestions, do share it with us. Thank you for watching and have a great weekend ahead.